I, Assistant Professor Deepika Kilinge, BBA Department, will take this immense pleasure to welcome all with this beautiful morning with new challenges and new opportunities. It is rightly said that it's not your salary that makes you rich, but it's a way you spend it and invest it. Being an management student, we always plan for further and future and aspire to make it safe and secure. This can be done by investing investment at right place in right. By keeping this background in mind, we Department of BBA in association with Bombay Stock Exchange BSc organize this today's investor awareness program to make our future happy and secure. We are grateful to Bombay Stock Exchange and today's guest speaker, Professor Amol Gotaskar, for his wholehearted support to organize this program. Now, I would like to request Professor Akhil Bajajwala, Senior Faculty BBA, to kindly throw some light on the theme of today's program. Professor Akhil Bajajwala, over to you, sir.
Thank you, Deepika ma'am. Good morning, one and all. Uh, Principal Dr. Artavan Sir, Professor Jahara Pathan, esteemed guests, uh, Mr. Amol from BSc, Amok from BSc, sorry. Today's program on investment, protection, and awareness. Investment as such is a risky decision which one has to take for his funds to grow. You cannot keep your funds idle. If we keep it is well said by some of the chartered accountants that if the funds are kept idle, it becomes slave. It cannot walk. They have to give you returns. Keeping cash with you is not enough nowadays. You have to get the returns on your excess funds so that you can fulfill your future needs. Now, the decisions of investments are a complicated decisions. Presently, there are various funds which are present in the market for your uh, investments, which protects one from a risk in the in keeping the funds in the financial markets. Now, as such, the investments are divided into capital investments and the recurring investments. Now, capital investments are of huge nature in the uh, perspective of the funds uh, which are involved in the taking the decisions. Capital capital investments are the investments for the purpose of purchasing the fixed assets. Now, here as a students, we are not very much concerned about capital investment because capital investment makes a huge outlay of funds. For example, you have to purchase a house or you have to purchase gilt securities. These funds take a huge amount of money from the investor's point of view. So we are not very much concerned with the capital budgeting decisions. But here, as an investor, you have to start the investing right from the your youth age when you are in the as a student. Now, at this point of time, most of the students do not have money with them. So, how to invest? That is the question, and which will be answered by I think Professor Amol. Very, he is a very eminent professor in the BSc Stock Exchange, and uh, he will guide us about the investments in mutual funds, shares, and other type of securities which are available in financial markets. You can classify the investments based upon the risk factors which you are comfortable in taking, because all the investment decisions will be based on the risk which is involved. The more the risk, less the returns you will get. The more the risk, sorry, the more the risk, the more returns you will get. But since we are the beginners in the investments, we have to take a calculated risk. This risk will only affect our uh, returns, because investments in either RD or mutual funds or fixed deposits in the bank will give you less returns, but the risk is also less over there. So depending upon that, you have to take the decision now. I hope that you will all take benefit about the investments awareness program, which has been conducted by the college, and I give over to Deepika ma'am. Thank you, sir. Thank you very much.
Thank you, Bajajwala sir. Without any further delay, I request our beloved principal, Dr. Aftab Anwar Sheikh, to kindly give his welcome speech and motivate our students. Dr. Aftab Anwar Sheikh.
Thank you very much, madam. It is indeed a pleasure that Department of BBA has organized this capital market awareness initiative. It is very important that our students should know what is capital market. When we talk about capital market, when we talk about options for investment, our students in their own way should think of investing something somewhere. I am very much thankful to Amod Gotaskar, Professor Amod Gotaskar, for sparing his valuable time, and today he is with us. Sir, what we thought that students doing BBA or student doing BCom or anyone who is having some acumen should think of investing some money so it will be useful for him for his future. When we talk about option trading, when we talk about speculations, when we talk about gambling, these things he should be in that way that nowadays what happens when IPL starts, automatically students start gambling. When students are sitting doing gossiping, they have some challenges and they gamble there. But students should learn something different. If they learn capital market, definitely they will think in different way. And that kind of acumen, and what is important here, that students are creative, but their creativeness must be seen in their investment, must be seen in their speaking, must be seen in their presentation. So thank you very much, sir, for being with us. Let our students be very much well versed with this capital market awareness program, the initiative taken by Department of BBA, HOD Jahara Patan madam, and all the staff members and all the students present here. Thank you very much.
Thank you very much, sir, for motivating and guiding us with your valuable and inspiring information about capital market. Now, I would request HOD BBA Department, Professor Jahara Pathan, to introduce today's guest speaker, Professor Amok Gurdaskar. Over to Jahara ma'am.
Thank you, Professor Deepika. We have an eminent speaker and eminent trainer from Bombay Stock Exchange today with us, Professor Amog Gotowskar. He is a PGDM dual in finance and marketing with more than 10 years of industry and training experience. He has done more than 170 financial literacy training programs conducted across Pan India, and especially primarily for the financial literacy deprived classes of the society, such as the sex workers, lower cadre public servants from nursing and police, laborers, workers of various organizations, as well as students, parents, teaching and non-teaching staff of various schools and colleges. Trainer Professor Amok has done a lot of trainings for financial literacy course for engineering students as well, which has been funded through Technical Education Quality Improvement Program, Phase 3, which is a Government of India project assisted by the World Bank. He is a trainer for the Enhancing Engineers Employability course funded through Prerna scheme of All India Council for Technical Education, that is AICTE. He is the resource person, a trainer for the Commodities Derivatives Awareness Programs conducted under the banner of Investor Protection and Education Fund of the Securities and Exchange Board of India. He is also a a resource person for the Investor Awareness Program conducted under the banner of Investors Protection Fund of NSE, that is National Stock Exchange,
चालू
and
तो है
BSE,
अभी
that is
चालू
Bombay Stock Exchange. He has conducted various guest lectures conducted at B schools like SIIB, Pune, and SIM, SREE, and KJSIMSR, Mumbai. Associated for certain key roles with more than 25 educational institutions across India. He has acted as a team advisor for the Nursi Monji College team for international competitions held in the year 2015 in the USA and Australia, with the team securing second rank worldwide and semi-finalist position respectively. He is also trustee and treasurer of Deep Archan Charitable Trust for enabling individuals, groups, and organizations in problem solving. He is a trainer come organizer for beginner and advanced photography workshops and nature and wildlife photography tools as well. That kind of a diverse portfolio Professor Amog shares with us. And indeed, Professor Amog, we are really very privileged to have you with us for this entire investors awareness program. Thank you.
Thank you, ma'am, for introducing today's guest speaker, Professor Amu. Now, I would like to invite today's guest speaker, Professor Amu, uh, to guide our students on future investments and options. Over to you, sir.
Okay, thanks a lot. Is the screen visible, guys? Please confirm. Yeah, a very
Yes,
good morning to, yeah, thank you. A very good morning to all of you. I would thank first of all the Bombay Stock Exchange through whom actually we are conducting this program. We have the backing of the Bombay Stock Exchange Investors Protection Fund. And I would also like to thank Principal Sir for being there to have a motivation given to all the participants for today. And Pathan Madam also, who's been coordinating for this event. So thanks a lot to all of you for putting this event together. And thanks to all the participants as well who've been joined in particularly for this session. So to begin with, I would just request all the participants to fill up the attendance for today's session. I'm just sharing the link of it in the chat box section. So kindly click on the link and please fill up the attendance for today, that is for today's session. And once you have put it up, that is you have filled in the attendance sheet, kindly type in begin, that is BEGIN, in the chat box so that I know that you filled the attendance and then we can start off. So I repeat, I request all the participants to kindly fill in the attendance sheet, that is the attendance for attending today's session. And once you fill it up, the link is already there in the chat box section. I've already shared it. And once you enter it, please type in begin, that is BEGIN, in the chat box so that I know that you have filled it up, and then we will start it off. So I'll just give you 2 minutes to fill it up. And I repeat, once you do that, please type begin, that is BEGIN, in the chat box so that I know that you have filled it up, and then we will slowly and gradually start off. I just give you 2 minutes to do that process. I'm just waiting for others also to confirm saying begin, BEGIN, in the chat box once you have filled up the attendance for the session. Please fill up the attendance because that is very important to give your go ahead so that I know that you have put in your details in the attendance sheet. because it is going to help you to also get a e-certificate which will be provided to you from the Bombay Stock Exchange for attending the event. So kindly fill it up. The link will get deactivated in approximately 5 to 10 minutes from now. So you will not be able to fill up the attendance later. So I repeat, kindly please fill it up. And once you have done filling up the details, kindly type in begin, BEGIN, in the chat box of the Zoom app so that I know that you are done and we will start off. Okay, so as I can see, there are approximately 34 participants who have put in their attendance, and there are approximately 58 that I can see in the meeting. So others also, I would request, there are around 20 more who have not yet filled up. So kindly fill it up. The link will get deactivated at 11:30, that is 5 minutes from now. So to start off, as I said, this event that we are having, this program or session that we are having, is sponsored by and backed by the Bombay Stock Exchange Investors Protection Fund. And this is a capital market awareness initiative, which is what we call as Investors Awareness Program. So to start off, the first question that may probably come to your mind as students, because most of you are students today, as participants of this session, is probably why are we having this program? That is, we are not investors. हम तो अभी जॉब भी नहीं कर रहे, हम तो अभी पैसा भी नहीं कमा रहे, तो हमारे लिए प्रोग्राम क्यों हो रहा है? Why is it? So point is, as of now, of course, you are not, you can say, earning money. Most of you are not earning money. But on the other side, whenever or whichever year you pass out, that is, you get a job or probably you go in for any kind of business activity, depending upon that, of course, you are going to start earning money. And once you start earning money is the time when you are going to save, and on the other side, you are also going to invest. So that is basically the initiative or the thought process behind having this particular session. So the reason for you to attend or you to participate or you to understand the motto or the objective of this session is particularly to give you a start, to ring a bell in your mind or your heads why and how you should proceed with any kind of investments or with any kind of savings that you are going to do going forward. So let's start off with the basic thing that we are going to have, which is nothing else but you are all students. So what is the reason for you to study today? Is the reason or the objective that you want a job or you want to work later? So now the question comes, why do you want a job? You want a job or you want to work, particularly because you will have to earn money. That is nothing else, because you also have expenses. So on one side, you are going to have a cash inflow, that is nothing else but you are going to have an income or you're earning. And on the other side, you're also going to have expenses. Which expenses? Typically the expenses that most of us as human beings are having, that is nothing else but primary expenses or basic expenses as we call it, which is food, clothing and shelter. So these three expenses are definitely going to be there for everybody. And besides that, of course, depending on our respective priorities, we are also going to have other expenses. So looking at these two things happening simultaneously, that is on one side having an income, that is an earning, and on the other side having an expense, that is a spending, probably a question may come to our minds ki, are we stuck up in a circle? That is nothing else but a circle of life, which is on one side having an earning, so money coming in or inflow of cash, and on the other side money going out or money getting spent, which is nothing else but our expenses. So in between these two things, we also have to do one more thing, which is what we call as saving. That is, first you will have an earning, then you should save money, and then you should move towards spending. So my first question to you all as participants of today's program is, what kind of saving should you do? As in, how much percentage of your income, assuming let's say your income is 100%, how much out of 100% should you save? You can give your answers, your responses in terms of percentage in the chat box. So I request all the participants to give your answers, your responses in the chat box. My question to you all is, if your income is 100%, how much out of 100% should you save? Your answer should be in percentage terms. Okay, so we have responses that have started to flow in. Okay, most of you are saying 20%. Okay, okay. Yes, anyone else? Any other answers? Okay, we have some answers of 40% also. Okay, great. Others? 50% as of now. Attendance wise, I'm just repeating, there are only 44 people who have put in their attendance. There are approximately around 10 to 12 more who have not put in. So please put it up. The link is getting deactivated in another 2 minutes. 11:30 it will get deactivated, and later on there is no other scope to come back to it. So please fill it up if you have not done. Otherwise, later getting a certificate for the program, for attending the program, will be a problem. Okay, great. So I have responses to my question which says that approximately out of 100% of income that we are going to have, our savings should be in the range of 20%, 40%, 50, 25, 30, and so on and so forth. The correct answer to this is our savings have to be approximately 40%, 40. So 40% should be our savings. Now, when you say that 40% is our saving, on the other side, we are left with expenses which will be approximately 60%, which is the balance. So 100, that is income, minus 40, that is savings, will give you your spending or your expenses, that is nothing else but 60. So now next thing that you should all understand is what kind of things should you be doing with regards to your income. So one thing you have to always understand is what should you do with that 40%. So to plan your 40% well is what should be your objective. So what do you mean by planning? Now, what we need to understand first of all is whenever we are going to talk about any kind of saving, that saving has to be invested further. So that investment that we do of that 40% will help us to become financially independent, which is also what we call as financial well-being, or you can see on your screen also called as financial freedom. So now what exactly do you mean by financial freedom or well-being or independence? Is typically not to be dependent on anybody. Right now, as I said, most of you are students. That is, you are all or most of you are dependent on your elders, be it your parents, your grandparents, your relatives, your brothers, sisters, and so on and so forth, elder to you. Point is, now you are dependent on them, but probably sometime later, as soon as you start working, you get a job, you start with a business, whatever, whichever case. Point is, from the age of approximately, let's say 25 till the age of 60, that is for the next 35 years, in this period, you are going to have a career of your own. So as I said, it could be a career related to a job, related to a business, or anything else. Point is, you will start earning money, and that is the time when you should be planning, that is, do your financial planning in such a manner that later on, that is 60 years of age, usually is the time when we retire. So that is the time when again we would start being dependent on somebody, because our earning or your income is going to stop once you retire. Of course, if it is a business, it will continue, but usually, let's say you are having a job, usually the retirement age in India, as we know, is either 58 or 60. So let's assume for the calculation purpose 60. So from the age of 60 till the age of 80, you are once again going to be dependent on somebody, because that is going to be the retirement stage of your life. So that age, of course, you don't want to be dependent on anybody. Reason is because you have something very important inside you, which is what we call as, Hindi में उसे स्वाभिमान कहते हैं, and English we call it as self-esteem. Please remember, it is not abhiman, that is ego. It is swabhiman, that is self-esteem. That is, you need to be financially independent, most importantly, at the time of your retirement. Now, probably a question may come to your mind, sir, मुझे तो अभी जॉब भी नहीं लगी है, अभी से आप रिटायरमेंट के बारे में क्यों बात कर रहे हो? But please remember, unfortunately, retirement is one of the most important financial goals of our life as human beings. But also, on the other side, in spite of it being important, it is also one of the most neglected financial goals of our life. Neglected मतलब जानबूझ के कोई नहीं करता है उसे neglect. But point is, we feel कि अरे अभी तो बहुत टाइम बाकी है, अभी से उसके बारे में क्यों प्लानिंग करनी? We will do it later and so on and so forth. But please remember, वो साल कैसे निकल जाते हैं? How the time passes, we don't even understand, because continuously our life is having our own priorities. So probably today you are children, that is, you are students. Slowly and gradually, probably you'll go for your higher education, then your whatever, you get a job, then probably you'll have your marriage coming up, you'll have to buy a house, you will have to go for your maybe any kind of trips and so on and so forth, buying a car. Slowly and gradually you start your family, so you'll have your kids priorities, And in all this, suddenly retirement कब आ जाएगा वो भी पता नहीं चलेगा. So reason to tell you now is the time, because once you start earning money, once you get a job, once you start with your business, immediately you should also start planning for your retirement, which is, I repeat, the most important, or rather one of the most important, and also one of the most neglected financial goals of your life. So planning that 40% of savings efficiently is very, very important when it comes to you experiencing that joy of financial freedom later on. That is not to be dependent on anybody else except you. That is you and your spouse, that is your husband or your wife. And on the basis of that, enjoying that experience or the joy of financial freedom. I repeat, also called as financial well-being. And another word for it is financial independence. So first of all, kindly give a confirmation saying double F in the chat box if you have understood this topic on financial freedom. I repeat, all the participants kindly type in double F in the chat box. Double F is financial freedom. If you have understood this topic on financial freedom, I repeat, also called as financial well-being or financial independence. Okay, great. So good to see your responses and good to see you actively involved in our discussion. Great. So now let's proceed to the next thing. Next thing that we need to understand is whatever incomes that we are going to generate. Once again, thanks a lot for your responses in the chat box. So once again, I would just like to tell you to be active in the chat box section so that whatever doubts you have, whatever questions you have, sometimes you may have to share an experience or a feedback. Sometimes you may contradict with what I'm saying. Absolutely no problem. You're free to do it. Highlight it, point it out in the chat box so that I continuously get on receiving your responses, and accordingly, then of course, we will proceed. So once again, thanks a lot for your responses related to this topic on financial freedom. So now let's move to the next thing. Next thing that we need to understand is what kind of incomes that we are going to generate. So the most popular income that we are going to generate is if we have a job salary, if we are a professional, then a professional income, and if we are running a business, then a business income. So whatever income that we generate, so that income is also going to attract some kind of deductions. So those deductions, popularly we call it as tax. That is, some kind of income tax is going to be deducted from your income if you have some kind of income that is generated, of course, from your salary. So on the basis of the income that you are generating, you also need to understand what kind of tax or what amount of tax is going to get deducted from your income. So in India, we typically follow a progressive taxation system. So what exactly is progressive taxation system? It means the more or the higher the progress we do in life, progress is defined as the money that we earn in a financial year. So as we know, a financial year is typically from 1st April till 31st of March next year. So whatever income we generate during these 12 months, that is clubbed together under various heads of income. The most popular heads of income that as of now we are seeing is income from salary. Later on would be called as income from pension once you retire. That is many years later. On the other side, you will also have income from investments. So whatever income from investments that you generate will be clubbed under two heads. The first head is what we call as income from other sources, where all the interest is going to get accumulated or added up. And on the other side, next that is coming out of investments is income from capital gains. So all the returns, that is positive returns that you generate, will be clubbed under income from capital gains. So let's first understand what is the difference between interest and return. So whatever interest that you generate is typically which is guaranteed usually in nature. So once you invest your money in debt or fixed income products, we'll talk about the products also later on. So the income that you generate out of it usually would be guaranteed in nature, which is what we call as interest. On the other side, whatever income that we are generating out of returns usually is not guaranteed in nature. What does it mean? It simply means that it could be high, it could be low, that is positive, both cases, or sometimes it can also be zero, that is no profit, no loss, break even as we call it in economics. Or it could also be in the negative, that is you could also suffer a loss. Point is, only if you get positive income, that is positive return, that is a profit, which is called as a gain, then you are liable to pay a tax on that profit. So how much tax do you have to pay? First, you need to check what is the amount that you have you can say gained, or what is the amount of profit, and in how much period have you got it. So there are two classifications to capital gain. First is short term capital gain, and second is long term capital gain. So any investment that you have done or you have made, and you have sold that investment before 1 year, that is 365 days, and you have got a profit, then that profit or that gain is called as short term capital gain, which means you would now have to pay a tax of 15%, 1 5, on the profit amount. Please remember, on the profit amount. So for example, you have invested 100 rupees, and now at the time of selling till 1 year, let's say you sell it at 125, then 25 rupees is your profit, because 100 was your cost, 125 is the selling price. So 25 is the profit. So this 15%, 1 5, that I'm telling you is to be paid on that 25 rupees, not on 125, neither on 100, only on the profit, that is the gain amount, which is 25 rupees. So 25 rupees ka 20% you have to pay, which is 5 rupees. Now, next thing that you need to understand is what is long-term capital gain. So any investment that you have made, and for example, if you sell it after 1 year, that is post 365 days, sorry, then that would mean that you have generated a long-term capital gain. But under long-term capital gain, you have an advantage. What is the advantage? Is the first 1 lakh of rupees that is generated as long-term capital gain is exempted from capital gain tax. That is, you don't have to pay any amount of long-term capital gain tax on the first 1 lakh of rupees that is generated. Mind you, if it was short term, entirely the amount becomes taxable. But if it is long term, the first 1 lakh is exempted, and for the balance amount, you have to pay 10% as the long term capital gain tax. So let's take a simple example. Let's say you have a total long term capital gain of 4 lakh rupees. So from that 4 lakh rupees, the first 1 lakh is going to be exempted. That is, you don't have to pay any tax on it. So the balance amount, which is 3 lakh rupees, you will have to pay 10% of tax on the 3 lakh rupees, which is 30,000 rupees will be your long-term capital gain tax. So that is typically the amount of income that you generate from investments. So if it is interest, everything will come under income from other sources, and that amount will get added up to your salary or your professional income. And the salary or the professional income together clubbed with income from other sources is going to be taxable as per your respective tax slab. So as we know, the Indian tax slabs are absolutely zero tax till the first 2,50,000, and over and above 2,50,000, we start with a minimal tax of 5%, and it can go as high as 30% depending upon which tax slabs do you fall into. So remember that the conclusion or the summary of this topic that we are talking about on taxation is whatever income that you generate, whatever category or type of income you generate, you will most of the times have to pay some or the other type of tax on it. And that is exactly what you need to analyze or study before doing any kind of investments or before looking at any kind of income. So that is the understanding of this topic. So if you have understood this topic on taxation related to your investments or your income, kindly type in tax, that is TAX, in the chat box to confirm that you have understood this topic, and then we will proceed. I request all the participants to give your responses. Type out in the chat box to confirm you have understood this topic. Please type in tax, TAX. At any point of time, you have questions, you have doubts, any feedback, any experiences, any contradictions, always, as I said, chat box section is exclusively for you all, the participants. Feel free to put it up in the chat box. Okay, thanks a lot for your responses. Next thing that we now come to is the income that we generate. So the income that we generate is typically our earning, as we said. But as I said, point is, many of us have a misconception. Yes, mind you, it is a misconception that we should first spend and then whatever remains we should save. Now, what is the problem with this? The problem is, if you start with your expenses that you're spending and then keep the balance for savings, then unfortunately you will wind up most of the times spending unjudiciously. That is, you will spend most of the times for things, for your needs which are mostly not justified in nature, but most of the times you will be spending it to keep your ego happy, or rather in simple words, to show off. Point is, rather than showing off or to just satisfy your ego needs, it is better to satisfy your basic needs first, for which what you should be doing is you should first save, and then whatever remains you should be spending. The advantage in this is, once you know what your saving is going to be, as I said, your goal or your objective is to save 40%, 40, out of your income of 100% or earnings of 100%. But some people may say 40 possible nahi hai. No problem. You can start with 20, 25, 30. But your goal, your objective, Hindi mein bolte hain lakshya. Lakshya is 40%, 40%. Point is, that is what you need to do. And once you save and then you keep the balance for your spending, the advantage here is going to be that abhi aap soch samajh ke kharcha karoge, because you have a limited amount of money now left for your disposal because you have already saved. And then whatever is your priority, जो actually आपको जिस चीज की जरूरत है उसी पे आप खर्चा करोगे, only on that thing you will now spend. So this important thought of first saving and then keeping whatever expenses for your spending was put forward, or is put forward, by Mr. Warren Buffett, who is considered to be the modern day father, you can say, of, or modern day guru, as we can say, of financial or capital markets. So this changing of mindset or our mentality as human beings is very, very important, and that is all what we should be doing. So now the next question that we should all be asking ourselves is, only saving money going to be enough? The answer is no. So what you should do? So when I say that you have to save 40% of 100, so 40% you have saved. Okay, good. That is a good thing you have done. So now, is only saving 40% enough? The answer is no. So what you should be doing is you should be investing it somewhere. So what is that investment that you should be doing is you should do it or deploy it or utilize it in a prudent or an efficient manner. So most importantly, two things should happen. One is your money should be safe. That is, it should have a minimalistic or a very small amount of risk associated to it. And on the other side, you should also have the potential, it should also have the potential to grow. That is, the value of that 40, that is the savings, should also grow or appreciate over a period of time. So these are two things that we should all look for. So now the question comes, what should we actually do with that 40%? As I said, you should save, but on the other side, you should also invest. So now the question comes, where should we invest? So we should typically invest in assets. Now, what is an asset? Asset is typically, which is what we call, or popularly what we call as an investment product, or something that helps us to earn something till the time we are going to hold it. So for example, we have invested in equity shares. So what are equity shares? Equity is typically the valuation of the company, and a small part of that valuation is what we are buying. So for example, if a company is worth 1 lakh crore, let's say something like Reliance. So if that 1 lakh crore ka company, if you want to buy, it is practically not possible for us to buy because it's a very huge company. So what can we do? We can buy a small part of that entire valuation of the company, which is what we call as a piece, or a share, which is what we call as an equity share. Please remember, if you're investing in equity shares, you also need to have a demat and a trading account for it, only on the basis of which you can use your demat and trading account for trading, that is buying or selling of the respective equity shares. Minimum quantity that you need to buy is one, and maximum quantity, as such, there is no limit. But as I said, you should also check the risk that is associated to it, because equity shares or equity markets will have a very, very high amount of risk that is associated to it. So analyze the risk. If you're okay taking up the risk, only then proceed. Otherwise, you can look at alternative type of assets, or asset classes as we call it. So what are the alternatives? The next alternative that we have is something which is what is a comparatively less risky product. That is either fixed deposits, bonds, or debentures. So what are these fixed deposits, bonds, or debentures? Out of these, the most popular is fixed deposits. So if we have some amount that we have saved, and if you want to invest it with a comparatively less amount of risk, we go to a bank and we deposit that money either in a savings bank account or a fixed deposit. So savings bank account would typically give you a lesser amount of interest as compared to fixed deposits, which would be usually for a fixed term or a fixed period of time. So point is, that money given to a bank, deposited in a bank, is a fixed deposit. On the other side, if you want to invest that money in a public sector company, then that company would give you a bond. Bank gave you a fixed deposit, public sector company would give you a bond. And if you invest that same money, let's say in a private sector company, that company would give you a debenture. So now the first difference was that you have given the money to a bank called as fixed deposit. You have given your money, or rather deposited your money, in a public sector company called as a bond. And you have invested in the third case in a private sector company called as a debenture. Now coming to the risk associated to it. The least amount of risk is there in fixed deposits. Comparatively high risk will be there in bonds, and the highest amount of risk would be there in debentures as compared to the other two products. Please remember, these are comparatively, all the three products are comparatively less risky than equity shares, but there is a risk associated to it. So what should you do is, once again, as far as possible, try to diversify your investments in multiple set of products, multiple type of products, so that your risk can be minimized. Please mind the word I'm calling out, minimized, and not eliminating. So we will not be able to make it zero. There will always be some kind of a risk that is associated to any kind of investments. But what we can try, of course, as I said, is that we can try to minimize that risk. So that is now what we need to understand. Next product is, probably someone may say, I want to take comparatively high risk than fixed deposits or bonds or debentures, but less than equities. So what is the alternative? The alternative is mutual funds. Now, what are mutual funds? Mutual funds are typically products where we invest our money in either equity shares or in some products like bonds or debentures or other fixed income products. But you are not investing it directly. So, as I said, initially you can invest directly in shares. Alternatively, you can also invest indirectly in shares. How? By investing in an equity mutual fund, which is the first type in a mutual fund. So you give your money, multiple number of people together club their money and give it to a mutual fund scheme. In this example, an equity mutual fund scheme, and that scheme further invest in the equity shares. What is the advantage? The advantage is that that company which is investing, or that scheme which is investing, has the expertise of a fund manager who is going to manage your funds. Because some people may always have that fear or have that anxiety कि मुझे तो समझ में नहीं आता है तो मैं कैसे invest करूं. So for these kind of people, it is better to invest in a equity mutual fund. On the other side, you may say, I don't want equity mutual fund. That is not my money going in equity markets. I want it to go in bonds or debentures or other type of fixed income or debt products. Then you can invest in the second type of product in mutual funds, a scheme in mutual funds, which is called as debt or fixed income schemes. So these kind of investments would go further in bonds, debentures, and other similar kind of debt or fixed income products. Here, the risk would be comparatively lesser as compared to equity mutual funds. Now, someone may say, मुझे थोड़ा ज्यादा रिस्क चाहिए इक्विटी स्कीम से, सॉरी थोड़ा कम रिस्क चाहिए इक्विटी स्कीम से, एंड ऑन द अदर साइड आई वांट अ हायर रिस्क as compared to debt products or debt schemes. So you have a third choice also that is available in mutual fund schemes, which is balanced or hybrid mutual fund schemes. Here, some investment that you have put in would go into equities and some would go into debt. So if equity is more than debt, it is called as equity oriented funds. Whereas if it is debt more than equity, it would be called as debt or fixed income oriented funds. Mind you, once again, mutual funds are always subject to market risks. So you need to understand all the risks that are associated to it. And most importantly, as I said, if you understand it and if you are ready to take that risk, only then proceed. Otherwise, we have already spoken about the other alternative products. Some people may say, I should invest in real estate. Some people may say, I may have to invest in gold. No problem. Both of them are also good investments. But one important thing that you need to understand in real estate is that the liquidity of real estate properties is comparatively less as compared to all the other products that we have spoken about. What is liquidity? Is how soon can you sell your real estate property? For example, if you have an emergency and you want that money to come to you from the real estate property. One point is, it will take comparatively higher amount of time for you to liquidate it, because liquidity, that is conversion of the investment product or the asset into cash, that is into money terms, is comparatively higher in real estate as compared to other products. Also, most importantly, if you are only going to buy the real estate and keep it as it is, then it is not making any sense, because as the definition of the asset, it is not going to pay you any returns, or it is not going to pay you any kind of interest. So the best way to have that real estate property is that probably you may decide to give it on rent, so that at least हर महीने वो भाड़े का amount जो है, rent का amount जो है, that will keep on coming to you, which will help you to get some kind of appreciation on that property, and on the other side, of course, some kind of return also on that property in the way of rent that you receive. Last but not the least, talking about gold. Many a times people feel that gold is an investment. Yes, it is an investment only if you buy and sell gold together. That is, sometime you will buy it, and of course, sometime later you are going to sell it. But unfortunately, in India, that is, most of us as Indians, we only buy gold, or rather, I would use the word hold gold. So buy करते हैं और घर पे रख देते हैं, कभी sell नहीं करते. So while buying, we say that yes, we are buying it as an investment. But mind you, when we say it is an investment, there will be buying as well as selling. That together should happen. That is, sometime later you should also sell it. But unfortunately, India only buys, most of us only buy gold and we keep it, we hold it. Yes, of course, if you are going to require it for some later time, fine. But just for investment purpose, if you are buying it, then you also have to sell it, because investment typically means both sides, that is buying as well as selling, should happen regarding it. So if it is going to happen, only then go for it. Otherwise, better that you go for other products. So if you have understood all of these things that I've said under the concept of assets or asset classes, as I said, kindly type in asset, that is ASSET, in the chat box to confirm that you have understood this topic, and then we will proceed to the next topic. I request all the participants to kindly type in asset, ASSET, in the chat box to confirm that you have understood this topic, and then we will proceed. Once again, I repeat, at any point of time, if you have any doubts, any questions, anything that you want to share, please feel free to do it, so that at any point of time, if I would want to give you any clarifications, any doubts you have, I want to answer it, I can always do it. My eyes are continuously on the chat box. Okay, I have a question. Can you please explain about real estate investment? I've just explained about real estate investment. So any doubts specifically that you have, you can always clarify. But the generalized aspect about real estate, I've just explained some time back. Any specific question, you can please put it up in the chat box. So accordingly, I can answer it. Otherwise, the generalized thought process about real estate investment is already what I have covered. So I'm not going to get to it again. But of course, any specific questions that you have, you can always ask. I can answer it. Okay, now moving ahead. Once you say that you have invested in assets, the next thing that you also need to understand is about asset allocation. Now, what is asset allocation? As I said some time back when I was talking about assets, diversifying your investments is very, very important. Now, why should you diversify? Diversification is going to help you to minimize the risk or reduce the risk associated to your investments. Please remember, once again, I'm using the word reduction or minimization and not elimination. That is, risk is going to be there, but we are only trying to reduce or minimize or diversify it. And once again, as I said, before you proceed with making an investment, you should always analyze the factors related to the investments. So now let's look at what are the factors related to the investments. So the first thing that we need to understand is, why are we saving money, or rather why are we investing the money? That is financial goals. As I said, we talked about financial goals before. Every one of us has some or the other kind of financial goal for which we are saving and in turn investing money. So what exactly is that financial goal? So is it marriage? Is it higher education? Is it buying a house? Is it buying a car? Is it going for trips? Is it retirement? Whatever it is, you should have that thing first clear, transparently, having in front of your eyes, in your mind, in your heads, and only then you should know that you are planning for this activity. That is, this is your goal, this is your objective. On the other side, the second factor that you need to analyze is the cash flow position. That is, how much is actually your income, that is inflow of money, inflow of cash, and on the other side, how much is actually your outflow of cash, that is your expense or your spending. Because on the basis of these two things only, you will understand actually how much are you saving and on the other side investing. So that is also very important for it to be analyzed. Next thing that you need to analyze is, of course, as I said, the liquidity of your investments or of your assets. Because sometimes in case of emergencies, as I said, probably you might have to sell it, and at that time you want the money most of the times to come to you as soon as possible. So how quickly or how soon can you convert your assets, or rather your investments, into money terms is very, very important, which is what you will understand from liquidity. Next thing that you should understand is the ease of making an investment or ease to create an asset. Now, what is ease? This will relate most importantly to mutual funds. So, when you say that you want to invest money in a mutual fund investments can be done in two ways. One is you can invest at one go, which is what we call as a lump sum investment. In case of mutual funds, it is 5,000 rupees one time. On the other side, rather than investing at one go, many a times it actually makes sense to invest in installments. That is, there is a ease of investment. That is, at one time only you don't have to give the entire money, but rather you will give it in installments. So in installments, when you invest in mutual fund schemes, it is called as a SIP, that is systematic investment plan. That is, rather than investing, let's say, rupees 5,000 at one go, it probably makes sense to invest rupees 500 per month multiplied by 10 installments, that is over a period of 10 months. Why is this an advantage to us? Is because we will achieve an average cost for the 10 months, because rather than investing at one go in one single month, we invested in installments in 10 different months. That is, you get the advantage. In finance we call it as cost rupee averaging, that or rupee cost averaging. What is it? It is typically that the average cost of your investment is going to come down, because each month when you are going to invest, the cost is going to be different. So that probably may give you an advantage of rupee cost averaging, or sometimes people call it as cost rupee averaging. Next thing that we need to understand is that taxation. Also, we have spoken about it. So all types of investments, or most of the types of investments, are going to have some or the other type of tax. So it could be income from other sources, that is the applicable tax rate for you, or it could be something like capital gain tax. So how much you would have to pay on it also you need to understand, and on the basis of it, study it, analyze it before making that investment. Next thing that you need to understand is the transaction cost. So now, what is the transaction cost? Most of the times, many investment products, whichever investment products that you are probably looking for, these investment products probably will have an additional cost associated to it, which is what we call as transaction cost. So the most common examples of it are something like brokerage, something like commission, or maybe something like a service charge. So this important three things, that is brokerage, commission, or service charge, is typically what we call as a transaction cost, which is adding to the cost of the overall investment. So whatever cost that is associated to this investment, you also need to understand that this particular cost is going to add to your overall cost. And on the other side, you also need to understand that it is going to lower down your profits, because your cost is increasing. The profit ultimately, whenever later you sell it, it will automatically come downwards. So that is what you need to understand with regards to transaction cost. So now, whenever you're talking about transaction cost, this is always what you need to analyze. Next thing that you need to check is something that is called as your legality. Now, what is legality? Legality is typically something that is related to the type of transaction that you're doing. Many a times when we do a particular transaction, that transaction may probably face some kind of hurdles or some kind of problems later on, because that transaction probably may face some difficulties or some problems related to it. Then in such a scenario, what is going to happen is, typically you are going to approach the legal system of our country. So for example, you may go to the police department, or probably let's say you go to the court of law. So that is the time when these people are going to check whether the transaction that you have done was legal or not legal. That is illegal or legal. So if it was not legal, typically they are not going to entertain any of your complaint, because in that scenario, they will consider your transaction itself as null and void. That is, there will be absolutely no kind of records that you will have to the, you can say, satisfaction to satisfy your complaint or your grievance. So understanding the legality of the transaction is also very, very important. Next thing that you need to check is, whatever investments that you're going, you should always be investing in a systematic or a disciplined manner. Now, what is this systematic or disciplined manner? Is you have to decide a frequency in which you should be investing. So someone may say that I will invest on a daily basis. Someone may say that I will invest on a monthly basis. Some may say weekly. Some may say quarterly. Some may say fortnightly, half yearly, yearly. No problem. Whichever way you want to invest, whichever frequency you want to invest, absolutely no problem. But always remember to stick to that frequency religiously. That is, no matter what happens, you should try to continue with your investments in that respective frequency, whichever you have decided out of whatever options that I told you. So that is what always you need to understand. Next is, whatever investments you are doing should most of the times be done for a longer period of time, because longer period if you invest, you may get the advantage of compounding. Now, what is compounding? In finance, typically compounding is called as the eighth wonder in the world. As we know, there are actually only seven wonders. But why is compounding called as the eighth wonder in the world? Is because compounding helps to increase the value of our investments in an exponential manner. So now, what is exponential manner? Let's take a simple example. Let's say you have invested rupees 100 in some investment product. So that 100 rupees now will attract an interest of, let's say, rupees 5 on that. So 100 now becomes plus 505. So the next interest that will now be associated to rupees 5, let's say, is rupees 8. So 105 now plus 8 will become 113, 113. Now the next interest that is going to get generated on 113, let's assume, is rupees 12. So now 113, that is 113 plus 12, becomes 125. So now let's go back to the original investment that we did. First, we did 100 rupees on which we got an interest of 5, making it 105. Next, we get an interest of 8 rupees on the 105, now making it 113, and post which the increase was by 12 rupees, making it 125. So check the growth. From 5 first, that is the interest amount, we got 8, that is 3 rupees extra next time. Next we got is 12, that is 4 rupees extra. And as you go on increasing the period, automatically the 5 rupees first became 8, 8 became 12, 12 will become, let's say, 17, 17 will become 24, 24 will become 31, and it will go on increasing in an exponential manner. That is not the same manner. So if it is same, it would have been 5, 5, 5, 5, 5, but it's not 5. It's 5, 8, 12, maybe later increasing to 17, 21, 25, whatever, XYZ, increasing at a increased space over a period of time. So that is the advantage that you might get out of compounding whenever you invest for a longer duration or period of time. So that is all that you need to understand as a part of asset allocation. These are all the factors that you need to check, you need to study, you need to analyze, and on the basis of which you can accordingly take your call whether you should be proceeding with that whichever investment you are finalized or not, or you should look for other alternatives. So if you have understood this topic on asset allocation, kindly type in double A, that is asset allocation, in the chat box, so that I know that we've understood this topic, and then accordingly we will proceed. At any point of time, if you have any questions, anything you want to share, any feedback, any experience, any contradictions, I repeat, please feel free to do it in the chat box so that we can have a quality discussion, a quality session, and accordingly then we can proceed. Thank you all for your responses in the chat box. Thanks a lot. Let us proceed with the next part. The next thing that we now come to is something very, very important, which is precautions related to our investments. That is, precautions we should be taking related to any investments that we do. So first of all, let's say talking about equity markets or the capital markets or stock markets. Whenever we are doing any kind of a transaction, we should always check the registration of the intermediaries. So who are the intermediaries in this case are either brokers or sub-brokers. So who are brokers? Brokers are typically an individual or an institution who are registered with the stock exchange. That is, let's say BSE. So where should I check for the registration? You can check it on the exchange website. That is, you can go to www.bseindia.com and go to the registration tab to check for the respective brokers. Similarly, you can check it for sub brokers. Who are sub brokers? Sub brokers are not directly registered with the exchange. That is, sub brokers register with the brokers and brokers further register with the exchange. So that also you need to check on the exchange website. So if not the exchange website, where can I check it? You should check it either on the exchange website, or you can also check the registration number or the registration details on the receipt that you get for the transaction of buying or selling whatever you have done. So what is the receipt? The receipt is typically called as the contract note. So the contract note is usually sent in an email, that is through the electronic form, not in the hard copy form, on your registered email address after the day ends. So usually the market starts at 9:15 and ends at 3:30 p.m. So by say approximately around 7 p.m. in the evening, or let's say by 8, 9 p.m. in the evening, you should be getting the e-copy of the contract note, that is the receipt, on your registered email address. Mind you, as an investor, if you are not getting the contract note, then you can always demand for it from your broker. And if the broker or the sub broker is not giving it to you or not sending it to you, you can always complain to the respective authority at, or the respective person at the broker or the sub broker's office. If they don't entertain your doubt or your concern or your complaint, you can approach the stock exchange, the respective department, the complaint department, or the grievance redressal department. If they also don't entertain or satisfy your doubts or your complaints or your grievances, you can approach SEBI. SEBI has a particular website for giving your grievances, which is called as Scores, SCORES, that is www.scores.gov.in. So you can place your request there, but please remember you have to follow the protocol of first going to the respective person at the broker or sub-broker's office. If not there, the exchange, respective exchange. If not there, then the SEBI website, that is Scores. So that is the process for grievance redressal. Now, next thing that you need to understand is what all information would you get in a contract note. So contract note is typically going to share a transparency about your transaction. So what is the information that you'll get is what is the name of the share that you either purchased or sold off, what was the price, what was the quantity that you bought or sold, was there any kind of tax, was there any kind of transaction cost. All this information transparently will add up to the total cost that you have to pay or whatever amount you have to receive. So that will be clearly and transparently mentioned in the receipt, that is the contract note. Always remember that in India and across the world, whenever we are trading or whenever we are dealing anything related to investments or anything related to stock markets, there will be a lot of information that is flowing in around us. That information may reach us through messages, let's say through SMS, WhatsApp, LinkedIn, Twitter, Instagram, Facebook. Probably we may read it in newspapers or magazines or other periodicals. Sometimes we may see it on the television or the internet, or sometimes we may hear it on the radio, and so on and so forth. Point is, information is good, no problem, but this many a times becomes misinformation. Now what is misinformation is, information is available, information is present, but most importantly the question is it verified? If it is verified or authenticated, then only it actually becomes information. Otherwise we should categorize it as misinformation. So my point here to tell you is, whatever information you get, always try to authenticate it, verify it, and try to also understand the financials of whichever company wherever you want to invest, because financial understanding of the company is also very very important. Now a genuine question may come up from you is, मुझे तो मार्केट समझ में नहीं आता, मुझे तो फाइनेंशियल समझ में नहीं आते, सो मैं क्या करूं? In that case, if you don't understand it, no problem, there is a possibility of that also, which is fine, no problem. We are all human beings, we have to accept it that we will have some of our deficiencies. So let's say if you don't understand it, you can at least go and ask some other people who understand it. So maybe you go to some experts or advisors or people who have experience about it and ask them. पूछने से अपनी value कम नहीं होने वाली is what we need to understand. You should open your mouth, you should ask. And in that case, then if you get information, once again try to align it with all the information that you have that is available to you. Check for its authenticity, verify it, and most importantly, as I said, also try to analyze all the asset allocation factors that I have already told you about. Try to analyze it and then only understand whether you should go for it or not. Because always remember one simple aspect: wherever or whoever tells you that this investment or this kind of a return is going to be very very high in this particular product or this particular investment, always remember that higher the risk, higher is going to be the profit or the interest or the return. So wherever you see that there is a high chance of profits or returns or interest, immediately a bell should ring in your mind that yes, there is also higher amount of risk, and only if you are ready to take it up you should proceed. Otherwise, as I said, look for alternative products. Always remember that many a times there will be a sudden rise or a sudden fall in the market also, but most of the times there is usually some kind of an event because of which it is happening. So rather than just buying when the market is rising or selling when the market is falling, also try to check whether this rise or this fall is associated to something or not, and on the basis of which analyze it, understand it, and only then you should proceed. Once again, I repeat, if you don't understand it, you don't get it, ask someone who is an expert, advisor, or maybe a person having prior experience. Always remember, whenever you issue checks or whenever you do any kind of transactions, try to do it in the check form rather than going in the cash form. Going in the cash form may be fine, no problem, but always also try to understand what is the risk that may get associated to it. Many a times there are also regulations which say that above this amount of transaction in terms of rupees, it is not allowed in cash, but still we may want to do it in cash. Then please remember that probably, as I said, is it legal or is it not legal? On the other side, is it risky, not risky? So all these are the simple things that you need to analyze, and on the basis of which only you should proceed with issuing whatever or getting into any kind of a transaction. Always also remember, whenever you issue a check, never give it in the check, that is the blank check form or the bearer check form. Always write the name of the person or write the registered name of the broker or sub broker. As I said, check for the registered name either on the contract note, that is the receipt of the transaction, or the Bombay Stock Exchange or the respective stock exchange website, so that you get the registered name of the intermediaries. So always remember to follow these basic instructions that I tried to tell you, and so that you don't end up getting into some kind of problems related to your transactions. So if you have understood this concept or this topic on precautions in the stock markets or related to investments, kindly type in precautions, that is Precautions, in the chat box to confirm that you have understood this topic, and accordingly then we will proceed. We are almost on the verge of winding up. So I would also request all of you to please share your feedback for this session. That, as I said, we are almost on the verge of winding up. I will be sharing soon the link for the feedback. That is, you need to share. I would be sharing it in the chat box. Before that, I would just request all of you, all the participants, to please type in precautions, Precautions, in the chat box to confirm that you have understood this topic. And accordingly, then we will proceed to almost, we are on the verge of winding up the session. I'm just sharing the link for the feedback in the chat box. So kindly go to this link and fill your feedback. Filling the feedback is very, very important, because this also is going to be verified before a e-certificate is issued to you for participating in today's session. And this certificate, as I said, is going to come from the Bombay Stock Exchange Investors Protection Fund. So kindly please fill up the feedback as well, so that the next process, particularly to verify that you have attended the session, is also completed. So don't forget to please enter your feedback. The link for the same is already shared in the chat box section. So please fill it up. That link will also get deactivated at 12:45. That is half an hour from now. The link will get deactivated. Filling up the attendance sheet as well as the feedback form, both are important for you to get your e-certificates. I repeat, from the Bombay Stock Exchange Investors Protection Fund. So please fill up. It will link will get deactivated in half an hour from now. That is at 12:45. The link will get deactivated. So please fill up the feedback as well side by side. We are almost coming to the end of the session. So we'll just proceed with the two, three things that are left out. Now, next thing that we now come to is understanding about the information that we got today. So, of course, as I said at the beginning itself, whatever information that we tried to share with you all was, of course, not 100%. It cannot be because we had a limited amount of time. So, point is the overall objective or the goal of today's session was to just give you an initial start that these are the basic things from where I can start off, where I start with my financial life, or rather my financial decisions in my life. But to comprehend this information, you also need to keep yourself updated. And for updating your knowledge or to have yourself updated, you should continuously go on reading, listening, hearing, listening, whatever things that are coming to you. But once again, I repeat that whatever comes to you, try to verify whether it is correct or not. So some things that you can probably read can be through books, or you can read periodicals, you can read magazines, reports, and so on and so forth. So two books probably which may help you to understand taking financial decisions in a better way in your life is one book is called as A Mad Money Journey, a Financial Adventure by Mehrab Irani. And another book is by a global author who is Mr. Robert Kiyosaki, and the book is Rich Dad, Poor Dad. So by reading these two books, probably as I said, these are not only the books, there will be n number of other books also, but these two books will help you to increase your awareness, to increase your information, to update your information about taking quality decisions related to your financial life later on. So kindly try to get hold of these two books. As well as I said, there will be other books also, but you can also update your knowledge, these two and others also, and you can take it up with regards to updating your information about taking quality financial decisions in your life. Last but not the least is we have definitely gone through a lot of negativity, particularly during COVID time, that is since March 2020, almost 10 months back from today, is what we actually started off with all this negativity. And otherwise also there is of course positives and negatives that is around us. But rather than concentrating on the negativity related to anything, related to a person, related to an event, related to a particular stage of life, whatever, whichever way. But point is, rather than going into the particular negatives of that person or that particular thing or that particular event, try to concentrate on the positives and become a learning machine. That is, try to get the positives from that particular thing, and most importantly, try to imbibe it or learn it. And most importantly, don't restrict yourself there, but also transfer it to others, transfer it to people around you, so that you will become positive one, and on the other side you will also make or try to make at least others also positive. Because in these times of negativity, positivity and spreading positivity, becoming positive of course first and then spreading positivity is very, very important. So try to do it, which will be of course a small effort. We will not change the world, that's impossible actually for us, but at least we can give a start. And that start of course is first from you own yourself, and then spreading it to others, so that we can take that small effort of converting other people also into positivity, having that positivity come into them also. This important thought is also given by a very, very famous, there is another person in the field of finance who is Mr. Charlie Munger, who says that no matter what happens, try to bring that positivity in you, so that we can try to make this place, this earth, a better place to live in. I can see only 25 participants have given their feedback. I would request others also to please fill it up. And attendance sheet also I have opened once again, and both the sheets will remain active till 12:45. That is approximately around 25 minutes from now. So people who might have probably filled up the attendance but not filled up the feedback, or vice versa, I repeat, I have opened both the sheets once again, and both the sheets will be active and open till the next 25 minutes, that is till 12:45 p.m. So please fill up. And once again, thanks a lot for joining in today's session, participating in it. And I repeat, this was only a start that was given to all of you, so that you can start somewhere or rather you know rather where to start from with regards to your financial life as soon as you start earning money or as soon as you get a job or a business activity you start off. So please take all this into perspective and try to prosper in life. And of course, as I said, it will help you all. And don't just limit it to yourself, also try to protect others from getting whatever you can say fooled or probably getting into some wrong things. So rather than having you only getting benefit out of it, also try to pass on this information to others so others also become aware and get the benefit of whatever information or whatever knowledge you got today. So once again, I repeat, thanks a lot to Principal Sir, to Prathan Madam, and to the college to take this initiative to have this session, which was backed and supported by the Bombay Stock Exchange Investors Protection Fund. And this was a capital market awareness initiative, which was the Investors Awareness Program. Last but not the least, you all as participants are going to also get e-certificates, as I said, to for attending today's session. So kindly note down the process to apply for your e-certificates. So once you fill up both the sheets, that is the attendance sheet and the feedback form. I repeat, both have to be filled up. Both are open currently and they will remain open till approximately the next 20 minutes, which is till 12:45 p.m. It is going to be open. So please remember to first of all fill both the sheets, that is the attendance sheet and the feedback form. Once you have filled that, you have to go to this particular website that you can see on your screen at tomorrow 1 p.m. I repeat, you have to go to this website tomorrow at 1 p.m., not now or not today, because the information is going to be verified and then it is going to be put up on that website. So go to this website tomorrow at around 1 p.m. and then you have to go to the right hand top side of the website. So on the website, on the right hand top side, you will see sign up in the same color and in the same format as you can see on your screen. I repeat, go to this website at 1 p.m. tomorrow. Now, once you click on sign up, so you will have to fill in some basic information once again there on the website. So that information that you'll have to fill up, of course, will start with your name, that is your whatever name and surname, full name. On the right hand side, your email address and your mobile number. Besides that, below that, you'll have to enter some information. Below that, you'll have on the left hand side type of program. So you have to select investor awareness program there. On the right hand side of that, you will see the name of your institution, that is the name of the college. So you just have to select from the drop down box the name of your college. So it will appear there tomorrow at 1 p.m. So go to this website tomorrow at 1 p.m. and do this particular process. On the right hand side of it, there will be your academic background. So your academic background, let's say you are from BCom or BSc or BA, whichever background you have as your academic background, please select it from the drop down box. If your background does not appear there, also don't worry, I repeat, you can just simply select BSc IPF, that is BSc is Bombay Stock Exchange, IPF is Investors Protection Fund. So you can just simply select BSc IPF, which is there and which will be there, and you can proceed to the next part, which is the last part, where you need to fill up a code. The code is going to be today's date in the DDMMYYYY format. So as you know, today's date is the 20th of January 2021. So I put it up in the chat box. You will write the code as 2001 2021. So 20 is 20 today's date, 01 is the month, January 2021, 2021 is the year. So that is how you'll be writing without any dash or slash or anything else. Directly 2001 2021 is what you will be writing, and below that you'll just press on sign up. Please remember, this is only one time allowed for you to enter the details. Once you have entered the details, you cannot do it for the second time. So if you make a mistake in your mobile number, in your email address, anything, in your name, in the spelling, whatever, there is no second time you can do it. So do it correctly, and once you enter all the details correctly, then only press on sign up. And once you press on sign up, approximately after that, in 24 hours or within 24 hours, you will get your e-certificate from the BSc IPF, that is Bombay Stock Exchange Investors Protection Fund, on your registered email address, that is whichever address you have entered there. I repeat once again, please enter all the details correctly, because they will be verified from the attendance sheet and the feedback form, that is whatever you have filled it up. And I repeat, there is only 15 minutes left for for you to fill it up. It is only going to be active for the next 15 minutes. Both the links are already shared. Please fill up your details in both the respective sheets. So that is all from my side. Once again, we are all going through coronavirus, COVID 19, as we know. We have become well versed with pronouncing it right now. We didn't even probably know the name of the virus before. But now it's very, very important to follow all the guidelines put forward by the central and the state government and protect yourself. And of course, first protecting you and then the people around you is also very, very important. So please wear your masks, use of sanitizers, washing hands, maintaining social distancing, and most importantly, maintaining your physical and mental hygiene is very, very important. So please do it and try to protect all of us. And of course, keep the Mother Earth in our prayers and pray that we should all come out of it as soon as possible. So thanks a lot once again for being there in today's session, and please follow the process of putting up your attendance, feedback, and later, that is tomorrow at 1 p.m. on the respective website, and to get your e-certificate. Thanks a lot once again. Stay safe, stay healthy. Pathan ma'am, you can take it over from here. Thanks a lot.
Uh, Yes, thank you, Professor Amok sir, for guiding and motivating us with your inspirational and knowledgeable speech on investment and options. Thank you, sir, for enlightening us on asset allocation, diversification, financial independence, and decision needed for retirement planning. We surely follow all the instructions and smart tips given by you for our financial well being and minimizing risk associated with it to make our future safety and happy. Thank you once again, sir. Now, question and answer session will be there. Students who have queries, they can unmute themselves and ask questions to today's guest speaker, Professor Amut. Is there any question? Raise your hand and unmute yourself and ask the question to today's speaker. Is there any questions? Okay, thank you. So we will continue. Now I request Assistant Professor Hina Syed, BBA Department, to propose vote of thanks. Over to Hina.
Good afternoon to one and all. I, Assistant Professor Ms. Hina Syed, on behalf of Fundamental Islam, of BBA, take the
Hina ma'am, you are not audible. Kindly.
Hello. Hello. Hello.
You're distant. Your voice is coming from a distance, Hina ma'am.
Hello.
Carry on, carry on.
First of all, I would like to thank all my thanks for honorable management and our respected beloved principal, Professor Dr. Aftab Anwar Sheikh, for encouraging us to organize such program with zeal and enthusiasm. I am immensely thankful to Professor Amok Gotoskar for his efforts towards wonderful knowledge sharing on the session Capital Market Awareness, which is supported by Bombay Stock Exchange. My sincere thanks to our head of department, Professor Jahara Pradhan, for her guidance and support. I, I mention my deepest sense of appreciation to all the faculty members of BBA and BBACA for their enormous cooperation. Finally, last but not the least, a big thank you to all my dear students for their active and participative listening in today's session. Thank you, one and all. I wish you a great day ahead. Thank you so much for joining today's session.
Yes, thank you, Hina ma'am. Once again, I would like to thank to all of you for sparing your valuable time for today's program and making it successful. I would like to thank Bombay Stock Exchange and Professor Amok sir for their wholehearted support to make it successful program. Coming together is a beginning, keeping together is a progress, and working together is a success. With this valuable thought, we will end today's program. Thank you and good day. With the permission, I will end the today's program. Over to Jahara ma'am.
Sure, ma'am. Thank you so much. So we conclude today's session here itself. Thank you, Professor Amol Kothuskar, to be with us. Thanks to all my dear students here. Thank you.
Thank
Thanks a
you.
lot.